Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, the AI craze is changing the landscape for businesses and the workforce. Constellation's Ray Wang will share his insight on how investors can best navigate it. Then our panel makes a case for a tool that can help you build wealth for retirement despite the bad rap it gets from some experts. And later, why Ben & Jerry's ice cream business is a hot potato. But we begin, as always, with our expert panel and 3 things investors should be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levisohn, Andrew Bary, and Elizabeth O'Brien. So, Ben, yet another record week for Wall Street. Was this all about the Fed, or is there more going on?
There's actually some more going on. I mean, don't get me wrong. The Fed got people excited. Everyone had thought that the forecast for future rate cuts would drop from 3 to 2, but it actually stayed the same despite some hot inflation readings to start off the year. But I think the real thing that got them excited again this week is just artificial intelligence. We had NVIDIA had its AI day or AI conference this week. We had Micron with some great earnings thanks to, you guessed it, AI. And Broadcom also had an investor day where it highlighted the AI opportunity, and that really drove tech stocks higher. We also had a big tech IPO in the form of Reddit, gained 50% on his first day of trading, despite trading at 10 times sales.
And Truth Social came out as well. Well, it didn't actually come out, but there's a SPAC that's sort of the equivalent of an IPO. Andrew.
Yeah, Donald Trump's company is going to debut as Trump Media under the ticker DJT on Monday. And the market value based on where the SPAC was trading on Friday is around $5 billion. And that's a very high valuation, given the fact that the company generated about $3 million in revenues in the first 9 months last year and no profits. I mean, Trump's stake is worth about $3 billion on paper. I'd emphasize on paper. I'm not sure whether he will ever be able to monetize it, that for anything close to that $3 billion value, given the fundamentals of that company.
Yeah, if you thought Reddit was expensive at 10 times, this is roughly 1,000 times. This is sales, not earnings. Hardy, I'm glad Chairman Powell, investors don't seem too worried about inflation, but I'm not sure we're out of the woods yet.
No, I don't think we are either, and I suspect Powell knows that. I was looking at the 5-year inflation-protected securities market. These are TIPS, the treasuries that price and protect you from inflation. And we've seen the amount of inflation priced into those go up to 2.43%. That was from about 2.05% in December. And if that keeps going up, the Fed is going to have to start worrying because it really needs inflation expectations to be anchored. But we're also seeing other central banks are in this cutting kind of mode, or at least wanting to ease things, with the Swiss National Bank actually going out and doing a surprise cut.
Which I think is good news. Real quick, can the rally continue next week, you think?
No, I think it can. I mean, everyone gets freaked out when the market's hitting new highs. It's like, oh my gosh, you're hitting new high after new high, and we've had a bunch of them this year. But usually that's a good thing. That's how the market goes up and how it's been such a great investment for people over time. So I think, yeah, you just keep riding it.
Alrighty, one stock that's not rallying right now, Andrew, is Apple, and the Justice Department just announced this antitrust suit, long-awaited antitrust suit. What do you make of it?
Well, it looks like an overreach by the Biden administration again on the antitrust front. I don't think it's going to have anything like any real success in terms of making a major impact on the way Apple operates. It's essentially the government saying that Apple operates as a monopoly in the smartphone market with its integrated system of its ecosystem of the phone, the watches, services, and software. And they're trying to basically change all that. But Apple says it will, if the government's successful, it's going to hinder their ability to operate. I think that's right.
So what do you think of the stock here?
I think, Gene Munster, an analyst, said that he thinks the ultimate thing that's going to happen is that Apple makes some small changes that really don't have much impact on the business. I think the stock's looking fairly attractive. It's around 172 right now. It's been one of the worst performers among the big tech stocks, down about 10% this year, trading for around 25 times this year's earnings, which isn't bad, considering you could see some acceleration in growth next year. And one thing Apple ought to consider doing is paying a bigger dividend, just 0.5%. And one thing to watch is Warren Buffett and Berkshire Hathaway. They're among the biggest holders of Apple. Berkshire cut his stake in the fourth quarter. People will be wondering, does Buffett cut the stake further in the first quarter, even though may not know for another month or so?
A lot of people here are making the comparison to Microsoft 2 decades ago. Yeah. Regulators went after it. Well, not only has Microsoft thrived, but that enabled companies like Google and even Apple to rise from the dead and oxygenate the system. So I think everyone might be okay here.
Yeah.
I want to ask you, Elizabeth, about a real hit that Humana stock has taken this year and some other stocks as well. And apparently it all goes back to Medicare Advantage problems. Can you explain that?
Sure, that's right, Jack. Now, Medicare Advantage is, of course, the privately run alternative to traditional Medicare. It's also known as Part C. You can barely turn on daytime TV without seeing a commercial for it with pitchmen like William Shatner and Joe Namath. It's been very popular with consumers, now enrolls more than half of the eligible Medicare population. It's been lucrative for insurers, but there's signs that the economics might be shifting. Like you said, Humana earlier this year said that healthcare utilization was way up. Basically, people are going to the doctor more than they expected. That's putting, cost pressures on them. And as a result of these pressures, they had to sharply reduce guidance, causing headaches for investors.
Broadway Joe likes it. I think I like it too. But what does this mean for recipients?
That's a good question, Jack. Now, nothing is going to happen this year because contracts are fixed for 2024, but it's definitely something to watch for 2025. We'll know this fall when open enrollment starts for 2025. It's possible that certain extra benefits might have to be curtailed, like the gym memberships. They even have perks for your pet these days, some of them. And premiums might also have to go up.
Pet insurance. Let's go back to the stocks, though, briefly. So obviously, Humana took a hit, some other companies as well. Is this margin pressure?
It is indeed, yeah. Humana stock is down about 23% for the year. Now, it's the purest Medicare Advantage play. United Healthcare also has a Medicare Advantage business and some other players, but Humana is the most exposed. And indeed, there are cost pressures and margins are getting squeezed.
All right, we'll hear more about this as the year goes on. We find out what 2025 premiums will be.
Exactly.